what's your take? Like, what should I do if I've got 100K or something like that, right now? What's the smart move?
Well, I can't give financial advice because I'm an attorney and that gets me in trouble. But I'll
Okay.
tell you what I do.
Yeah.
I invest my money in 5 places.
Okay.
I invest in real estate, stocks,
Mhm.
businesses, cryptocurrency, and commodities like gold.
Yep.
So, like you, I bought a good chunk of real estate after the 2008 crash. Now, when I'm still buying real estate, I'm just being way pickier than I was before because prices are a lot higher, and I'm not trying to overpay for real estate. I want to find deals where I'm getting some good cash flow, deals that I'm looking for, which is a lot more work now. It takes me a lot longer to find a good deal than it did a few years ago. So I'm putting in a lot more work in order to find the deals. But it's not getting emotional with anything. Like, I was in Austin recently, and I was looking at some of the real estate there, and in the downtown area on LoopNet, they were listing some of these properties at a 1.5 cap, even a 1 cap, which means a 1% return on your money. If I invested $1 million, I will get a 1% return on my money. And so that was like, okay, that's cool. Maybe Austin will be the next big city, but I don't want to speculate. I don't like speculating. I want to see cash flow today. I'm gonna make my investment based off of today's prices.
Exactly.
So with real estate, I'm being very picky. I'm still buying deals, but I'm going to be very picky. With stocks, I have 2 strategies. I still dollar cost average every single week. I have money going into ETFs because I believe in the American economy. I still believe we're the strongest economy in the world, and I'm a big believer in that. But I also invest into individual companies. Again, very, very, very picky. Not investing the way that I would if we were at a bottom. It's just, you got to be pickier. And so that means I'm not buying as much, but I will buy if I find something good. Third is businesses. I love, like you said, I love working with entrepreneurs. I love working with startups specifically. So I am investing in startup companies. I'm working with entrepreneurs. I love it because I'm an entrepreneur myself. I think entrepreneurs can save the country and the world. I'm a huge fan of entrepreneurs, and I love to support them through either my advice or whatever I can do to help out. So I'm investing in them, and this is more accessible now than ever. There's a regulation called Regulation CF, Regulation Crowdfunding, which allows regular people, non-accredited investors, to invest in startups. Now, got to understand that investing in startups is very risky because there's a high chance that your startup can completely fail. Most startups fail, but you also have the opportunity for higher upside. And so you can go to something like WeFunder or Republic or what's the other one? One more, Start Engine, and these are places where now you can invest in startups that are looking for capital. Again, high risk, high potential reward. Then cryptocurrency. Look, man, cryptocurrency is going to have a lot of implications in the future. Is cryptocurrency going to go straight up? No, we have a lot of risk in cryptocurrency. High risk. We could see another 2001 style crash in cryptocurrency. But I believe in the technology behind cryptocurrency, and there's a lot of different ways that you can earn money or store money in cryptocurrency. Like, obviously, you can invest in things like Bitcoin and Ethereum and hope to see appreciation. I'm not a huge speculator. I don't really like doing a lot of that. But what you can also do is you can earn interest on some of your money. So, like, you can put your money in a stable coin, which are a lot of times they don't change. They stay at around $1. And there are certain platforms out there which will pay you 7, 8, close to 9% a year on your money. So you take your dollars, you take $100, you convert it to 100 stable coins, and now you can earn 7, 8, 9% a year on that stable coins, and you can convert it back to dollars whenever you want. Now, again, it has risks. These money market accounts like this are not, they don't like to call themselves money market accounts for one, but they're also not FDIC insured. They're not FDIC insured. And so, there's also a risk that your stablecoin could go bankrupt. And so you got to be smart, you got to be educated, and you want to be aware of the risks that are involved. But, cryptocurrency, I believe that it's going to have a lot more implications in the future. And then commodities like gold. No, I don't care what gold prices are. For me, it's insurance. It's just something that I own. It's money. I look at it like money. It's just a place where now I take my dollars and I use it to buy some gold, because and it's not a huge chunk of my portfolio, but I do own gold as a hedge, and it is just money. The way that I look at it, that's like, savings essentially, and it's just things that I keep and I hold. I never look at, and I just keep adding more of that a little bit here and there.
Yeah. No, I think that makes a lot of sense. Yeah, if you can find some good real estate deals, cash flow deals, right? It sounds like you've got a very similar mindset in terms of, I consider anything speculation that requires a future event to occur.
Yeah.
And an investment is something that doesn't require a future event to occur. So when I'm looking for real estate, I'm looking for investments. I'm looking for it to have a good return already. And then if it appreciates in the future, great. That's my lottery ticket for the future. But yeah, the same way I'm looking at gold as stable, hard money in the sense that, if we do have massive inflation, then hey, okay, well, that money, you can't make a lot more gold, so it's got to have some value. But it is alarming, I think, to see that the gold isn't going up. I feel like that market is somehow being manipulated, because with this massive inflation, if gold is priced in dollars, you would expect, okay, well, the value of gold hasn't changed, so it should go up relatively to the dollar as the value of the dollar is going down. But we're not seeing that right now. Maybe we're going to see a rapid run up in the future, but yeah.
Peter Schiff. Peter Schiff is a guy on YouTube who loves talking about gold. I don't know too much about the economics of gold in that sense. I understand it as a store of value, and I don't really track its day-to-day price. I own some of it, and I just buy a little bit more, and I want it. That is my store of value. Whether it goes up or down, I don't really care. It takes time, effort, and labor to produce gold, and it has been a currency for centuries, and so that I understand that aspect of it. So that's how I look at it. And in terms of investing, like what you were talking about, I think what every viewer needs to understand is what's right for me or you might not be right for them. And every person in their stage of life is going to have different goals. Like if I was 22 years old and I had, let's just say 10 grand to my name, I'm going to be a lot more risky because I don't have a wife. I don't got, when you don't have things to worry about, if you don't have financial responsibilities and you have the ability to be more risky, you can, because you also have time to get that money back. Now, I still have a portion of my portfolio for more your speculative, risky things, but that is a very small portion, right? I understand that all this money can just leave and go away and never come back. Right. And so, there's a time and place to be risky, and it's just understanding what is your risk tolerance and at what point in your life. Without risk, there's no reward. You always have to be able to take risk, but it's how much, right? When when you're 22, you take a different risk than when you're 45. And it's just how do you, at your point in life where you are today, what are you comfortable taking risks on? And this, like, for example, cryptocurrency is one of the greatest transfers of wealth ever. I mean, there's a guy that I know, he worked a regular job, and he started buying Bitcoin and a couple of the cryptos years ago. And now he is a millionaire in cryptocurrency. And he would have never became a millionaire through his job. I think he's probably making just a average median salary. But he is a millionaire in crypto. And now he is looking to move outside of the United States because of the way United States are regulating cryptocurrencies. And he's looking to move to a country which is now adopting Bitcoin as its national currency. Now, do I advise people doing that? No, but I mean, it's just the way the world is changing. Some people who, this would have never crossed my mind that somebody like this would consider leaving the country because of currency issues. I mean, the world is changing, and obviously cryptocurrency is a big leading factor in that. I mean, whether you believe in crypto or hate crypto, you cannot ignore the fact that crypto has made many people very wealthy. Does that mean that you're going to see the same trajectory next year and the year after? No, you can never predict that. You could see a massive crash in cryptocurrency, just like you can see a massive crash in the stock market. Exactly. There is risk. And so you just got to understand, again, where is your risk tolerance and what you believe in? And the way that you can mitigate risk is by learning. Thank you for watching. If you enjoyed this video, here's a video on investments that you need to own for life. And while you're at it, download our free guide on how to start generating passive income. And as always, keep
hustling. If you still believe in the long-term value of this company, you're just not happy with the price, then you are switching sides. That's why you got to start by understanding your goal and knowing what your strategy is, because if you're investing for the long term, then you got to understand market crashes are a part of the game.